Okay. Ustina, good to go?
Yep, we're ready.
Awesome. All right. Good evening, everyone, and welcome. Thank you for joining us today and for being a part of our very first webinar series, the Invest Like a Pro webinar series, OmniX. And if you can hear me, do a thumbs up, please, just to ensure that we're all here and we're ready to um, consume as much data as our guest is ready to share. Awesome. Thank you so much. Thank you so much. I love it. So I'm excited and I'm happy that you're also excited about this series because it is designed to help you go beyond surface level investing and really understand the systems, the policies, and the shifts that affect your money. So come 1st of January 2026, four new tax reform bills were officially or will officially come into effect in Nigeria, along with other tax regulations that are already shaping how individuals and businesses operate. Now, for many people, tax changes sound like something we should be worried about. But in reality, the biggest advantage comes to those who understand the rules before they fully kick in. So today we'll be unpacking what's changing, what it means for your investments, and what you should start thinking about now to position yourself properly for the future, which is less than 30 days from now. My name is Tara Mary Nadi, and I'll be your host for today's session. I am a product manager with a background in building digital financial products, investment platforms, and innovation led solutions within the financial service space. I currently work on OmniX, Sterling Bank's digital investment marketplace. So, my role today would be to guide the conversation, keep things practical, help you connect and understand exactly where these regulations and how they would lead to your positioning in the investment marketplace. For those of you just joining, OmniX is a product of Sterling Bank, and this is our very first webinar series. OmniX is a digital investment marketplace designed to help individuals and corporate financials access diversified investment opportunities while also giving you clarity, structure, and insight into how to invest and how to position yourself there. So this webinar series is part of our broader scope to empower businesses, empower individuals, not just with their products, but also with understanding. Now, with all of this said and done, I would introduce you to our very own guest speaker, who is joining us from Sterling Bank. So today we're joined by the group head of tax at Sterling Group, Ni Adeyemi. Sorry, let me accept this. Ni has deep experience in taxation, regulation, and financial structuring, forgive me, and he has been closely involved in analyzing the implications of Nigeria's evolving tax reforms. With over 10 years of experience as a tax professional, covering more than 300 projects spread across tax compliance, advisory, risk management, planning, and technology, Ni is one of Nigeria's preeminent tax consultants. So we're very, very excited and looking forward to as much information and data that Ni will be sharing with us. Ni will be walking us through all these changes and how they apply to us as individuals, as investors, business, corporate investors, and individual investors, and how we should start preparing for the year 2026. Ni, you're welcome, and thank you so much for joining us on this session today. Ni, are you there?
Yeah,
Awesome.
I'm here, Tara. Thank you.
Thank you. Thank you so much for joining us. On behalf of the OmniX team, we're saying thank you for being our very first guest. So we love it. And
Yeah,
this
it's
is
a
the start of
pleasure.
something great.
Thanks.
Awesome. So today's conversation is centered around one key idea: how to invest like a pro in this new tax era. By understanding the rules and early positioning yourself, you get to not just unpack, but you also get to understand how to position your business. You know how to, and also understand how to build your money. And with that said and done, if you have questions, we'll be opening the question and answer section after. I mean, we're going to have a short break at some point. So if you have questions, please pen them down or put them in the Q&A box. So once Nii gets started, we need to give him our full attention. And I'm sure you'd have a lot, and it will definitely change you and your businesses after today. Nii, the floor is open to you. My very first question to you is, what is this tax reform about? What's the objective? What's the goal? What's the impact on us as businesses and individuals?
Yeah, fantastic. Tara, you allow me some few seconds to project a slide
Of course.
so that I can speak to that slide and then the audience can follow it. Now, we're talking about the Nigerian tax reform. We want to focus on your strategy and how this impact on your investment. Now, talking about what are the objectives of the tax reform, I believe everybody knows that Nigeria started the reform in 2024, and that reform culminated in the implementation of or the promulgation of new laws, which is essentially trying to straighten out our laws. You know, we had several legal framework for simple taxes. We have about 200 taxes in Nigeria collected by states and federal government agencies. So one of the objectives of the tax reform is to streamline the legal framework for taxes. And then there were some of our laws too. That probably came into force as far back as 1930. You can imagine using a law that was enacted in 1930 to run transactions in 2025. You know, so there was an obvious need for us to change some of those laws. Of course, we also have issues with we have so many laws, but they were not generating enough money for us. You know, what tends to happen is that the more number of taxes you have, the less money you generate. You know, it's like going to a church. When you call for offering too many times, people tend to give less than when you call for offering once, really. And it's like that in taxation as well. So the more number of taxes you have, the less you tend to collect. So we needed to streamline the number of taxes that we have so that we can generate sufficient revenue to cover our recurrent and non-recurrent expenditure. And it was also important for us to conduct a tax reform because we needed to incentivize the right things. Over the years, our laws were not incentivizing the things that are important to our national development. So we incentivized things that does not necessarily result in productivity. And this was one of the reasons why we needed to conduct a tax reform. We were taxing a lot of our poor people. We were taxing capital instead of taxing profit. We're collecting money from people who don't have money. And what the law has intends to do is to now straighten out those things. And the assurance you can get from all of this is that you will likely pay less tax under the new tax law. You will likely have lower tax administrative burden under the new tax law. And in my view, and is an enlightened view for that matter, the tax law is way better than what we have practiced over the last 100 years. You know, the one we're about to get to, and it's also good for investments. Some of your investment that are taxed twice, you know, they would only probably be taxed once, and even the tax obligation on some of those investments have reduced. And I believe we'll get into that as we progress in this conversation. So that would be my initial response, Tara. Yeah,
awesome.
Thank you.
Thank you. I mean, with that little one, I've unpacked a lot. 1930, it's long overdue. So, in respect to this question, I want to know, are these taxes really going to increase? I mean, you already said that it's going to less admin burden and pay less, right? But how does, I mean, our investors are very curious. How does this new tax reform laws affect the money market industry, the CGT implications for equity and balance funds, likewise trust in the markets? What's that about, and how do we, what posture do you like also, would you advise us to take in this regard?
Now, the good thing, maybe a place to start would be to let you know how the new tax law impact on different wealth management structures. So I would then dive deep into financial assets and, of course, by extension, the money market as you know it. So what I can tell you in summary is that you have very favorable provisions within this law. With respect to real estate, for instance, yes, in the new law, rent is still supposed to be taxable. If you have a landed property, and if you have properties and you rent it out, that rent is actually subject to tax, and there's a requirement within the law for your tenant to actually disclose it to the tax authority. Now, I also go into if you dispose your house under the new tax law, the house you currently live in, you are not liable to any tax for that disposal, irrespective of the amount, and I think that is good. Under the current law, if you do any disposal, it is actually subject to tax. Now, under the new tax law, the rate for capital gains is changing for real estate transactions from the current level of 10% to your marginal tax rate. What your marginal tax rate means is that what proportion of your income do you pay as tax? So if you earn an income of 10,000 naira and you pay 2,000 naira as tax, it means your marginal tax rate is 20%. So if you make any capital gains, it will be 20, you have 20% to pay. But the good thing about this also is that the exemption threshold is very large. So you don't get to pay capital gains tax until your income gets to a certain level, But if you sell land and building, if it is your primary residence, there will be no tax at all, even if you make more than 100 million. And I think that is
That's good.
Yeah, you don't get to
very
pay.
Good.
Yeah, and then if you earn rent is not subject to VAT. You don't get to pay value-added tax on rent. So whether you are renting a house or you are leasing a house to another person, you don't get to pay VAT under that law. Then if you got rent from abroad, if you have properties abroad and you earn rent from that property, when that rent gets to Nigeria, it is not subject to any tax. Now I come to financial assets. What the law now provides for is that investment in short-term securities and corporate bonds. Short-term securities where you have the money market instruments, the treasury bills, the commercial papers. Investment in such instruments is not liable to, is only subject to withholding tax of 10%. Under the current law, you would be required to pay not just the 10%, but you will also be required to disclose it in your return and be subjected to tax on the full sum. But as an individual, under the new tax law, you are only required to pay 10%. So if you invest in treasury bills, your bank or your financial institution will take a withholding tax of 10%. The withholding tax of 10% that you have paid is the final tax you get to pay on that income. And I think that is a good thing. Now, under the current law, only federal government bonds are fully exempt from tax. But the law was then reformed to include state government bonds. So if you invest in state government bonds, you will not be liable to any withholding tax, and the income you get is fully exempt from tax. And I think that's something to be excited about. Now, coming to the equity side of the market. Now shares are subject to capital gains tax. So when you sell your shares, you are supposed to pay capital gains tax. Now, what the new law has now done is to say, if you sell shares and you don't make as much as you don't have a proceed of up to 150 million naira, and your profit is not more than 10 million, you can take your money away without any tax. So what I mean is that if you sell shares and the total consideration you get from that sale is less than 150 million, and your gains, that is the difference between the amount you sold it and the amount you bought it, is less than 10 million, you can take that money away without any tax. And I think it's something for a lot of investors to be excited about.
Yeah. Yes.
Because you don't get to pay any tax, And
yes.
If you earn dividend and interest from abroad, you still continue to enjoy tax exemption. So you can imagine that when you think about it, it's almost like you are getting into a completely tax-free environment, because a lot of exemptions, and the idea is not that government is not looking for money, it's just to minimize tax burden on the
individuals,
middle
citizens.
class, and then the people at the lower rung of the economic ladder in our society, so that only the rich get to pay these taxes. So I think that is for real estate and financial assets. Maybe I just quickly take trust. Maybe before I get to trust, let me just take your next question. I can then sum that up with the other bit of the financial asset, because I want to get to the specific of the financial instrument that our audience will be interested in.
Yeah, well, the next question coming was more about how this impacts attracting foreign investors. So I don't know.
Yeah, so I mean, there is a lot of attraction for foreign investors here. There's a lot of attraction for foreign investors here because what do foreign investors typically look at in our country? They look to invest in some of our priority sectors. And the good thing is that the Economic Development Incentive Scheme, so what we used to call Pioneer Status Incentive Scheme, that allows you to invest in Nigeria and you are exempted from tax for the first 5 years of that business. That whole system has been reformed in such a way that if you invest in certain sectors in Nigeria, like manufacturing of cars, like renewable energy, you can actually apply for an economic development incentive. Now, that is the FDI side of the foreign investor. Now I come to the FPI side of foreign investors. Now, for foreign portfolio investors, now they can, the capital gains tax rule, as much as some people have complained about the 30% range, I don't think it's such a bad thing, because in Nigeria, you are allowed to make the scope of allowable deduction against your gain is wider than it used to be. So if you borrowed money to invest in Nigerian capital markets and you make a gain, besides the cost of the asset that you sold, you can also take the interest you have used the interest on the money you borrow to buy those shares as a deduction for the purpose of capital gains. So, and the good thing also is that if you eventually get to a situation where you don't even have a gain, if you eventually get to a situation where you have a loss, the government also allows you to carry that loss forward into the future and recover it against your future profit. Sorry, can you still hear me?
Yes, I can. Yes, I can.
Yeah,
I was excited about that.
Yeah, you can recover that. You can recover that loss against your future profit. And the good thing also is that if you reinvest, if you buy, say, Dangote shares, for instance, and you sell Dangote shares, and then you now bought Seplat afterwards, you don't get, even if you make money from the sale of Dangote shares, provided you have reinvested the money into another Nigerian company, you don't get to pay capital gains tax. So if we look at it from a positive slant, the tax law is good for both FDIs and FPIs, actually. You understand that? So that's what I would like to say about how it's impact on foreign investors here.
Oh, I love it. Thank you. This has been impactful, and I'm looking forward to as much more as we can. So my next question, if you can, is on the impact to individuals and personal finances. How does this affect savings, investment incomes? And likewise, the effect of this on the daily inflows into personal bank accounts. Likewise, what exactly will be deducted or collected, the interest as well on deposits. So please, if you could share what this changes, would be very excited. Okay, I can see your screen.
Now let me get into that. So I will talk about how this reform impact on personal finance. But before I get into that, let me talk about some of the financial instruments and how the new tax law impact on some of those financial instruments. Now, the Treasury bill, as you know it, Treasury bills are discounted instruments, and over the years, you may have enjoyed collecting your discount income without any tax. But going into the future, you will now have to pay 10% withholding tax on the interest on your Treasury bills. So as your bank is actually paying you your interest, so if you invest in a Treasury bill of 1 million naira and you earn an interest of 100,000, your bank will only pay you 90,000 and take 10,000 naira as withholding tax. But the good thing is, as an individual, the withholding tax you pay is the final tax that you get to pay on that income. As a corporation, you still get to declare that income for the purpose of income tax, and it should be subjected to income tax. But the good thing is that the withholding tax that was deducted from you can be used to offset part of the tax resulting from the corporate tax on the Treasury bills. So for individuals, you only get to pay withholding tax on the Treasury bills, and that is the final tax on such. For federal government and state government bonds, I've said that they are fully exempt from tax, no withholding tax, no further tax. Commercial papers, if you have interest or discount on your commercial papers, they are subjected to withholding tax going forward. So, we have always had this conversation of if interest are not discount, interest are not premiums, interest is different from, in non-interest finance arrangement, for instance, they call it share of profit or margin or markup. What the law has now clarified is that the name that you call a debt claim doesn't really matter. Whatever it is earned on a debt instrument is an interest for the purpose of the tax law, and that means that you would have to pay a withholding tax of 10%, and the same for corporate bonds. There's no withholding tax on shares. So if you invest into shares, your stockbroker will pay you your money in full, provided you don't have to pay a capital gain, and then, but the other thing that I want us to quickly pay attention to, especially those within the fund management space, is the emphasis in the law regarding collective investment scheme, which is what we know as unit trust or mutual fund. Now, the distributions you get from your mutual fund will still continue to be exempt, but there's a bit of a challenge here. The law is seeking to subject mutual fund to tax as if they were a company. So the requirement of the law is that mutual fund will now have to pay tax in the name of their trustees. In other countries, mutual funds are actually treated as pass-through vehicles. They are treated as pass-through vehicles, which means that if a mutual fund invests in Treasury bills, it gets the interest on that Treasury bills and is allowed to fully distribute that income to its subscribers without any tax. But what the law seems to be saying is that the mutual fund will have to pay tax and then distribute whatever is left to the subscribers. That may impact on returns for mutual funds going forward, but there is a need for advocacy within that space. But at an individual level, if you invest in a treasury bill, if you invest in a mutual fund, the dividend you get from the mutual fund, because the law calls that distribution that you get, the law calls it a dividend. So the dividend you get from your money market fund, from your equity fund, from your balance fund, they are not subject to withholding tax. The expectation is that whatever you then get from the fund, you're supposed to go declare the income to the tax authority by yourself. So that is something to note. But for individuals, what they need to know is that your distribution for mutual fund will not be subject to tax, when it's coming from your fund manager, but you will be required to disclose it as an income for the purpose of tax at an individual level. What the fund manager needs to note is that the mutual fund, especially the trustee of a mutual fund or the fund manager, as the case may be, needs to note that the fund is now supposed to be subjected to tax. So if you look at it, this may create a situation where direct investment in a financial instrument may eventually be better than going through a fund. We still have to run the numbers, but that's what is appearing to look like on a high level. So fixed deposits and private debt notes, they are now subjected to withholding tax unconditionally. So there is no situation, there is no classification or arrangement that will make a fixed deposit or a private debt note to be exempt from withholding tax. And the point to note here is that as people deduct withholding tax from you, it is not an expense, especially as a corporation. It is not an expense against those income. It is actually an advance payment of income tax. So everybody should take note of their withholding tax. Everybody should take note of their withholding tax credits and ensure that they are tracking it. So on a personal finance note, the law has introduced an adjusted rate. The law has introduced an adjusted rate for income tax, and what that means in impact is that personal income tax is expected to reduce, especially for people earning below 2 million naira per month. So if you earn below 2 million naira per month, your personal income tax is expected to reduce significantly. If you earn above 2 million naira per month, your personal income tax is expected to increase marginally and progressively as your income becomes bigger or higher. So but the good thing also is that there are reliefs within the new law that you can utilize to minimize your tax obligations. So personal level, you can use if you pay rent, for instance, you are allowed the rent to live allowance of up to 500,000 naira. So you bring your receipt to your employer, or you bring your receipt to you show your receipt and you are given a rent allowance of up to 500,000 naira. You can also use life insurance. If you pay premium on your life or that of your spouse, you are entitled to a relief for that purpose. If you contribute additionally to your pensions, regulated pensions, you are allowed a relief for that purpose. And if you so those are some of the reliefs that are available for you to use. And then maybe I should also clarify at this point that there's no relationship there is no relationship between the money that flows into your bank account and your tax obligation. They are completely different things. Tax obligations are based on profit or salaries, emolument, or income. If you have not made income, the fact that money came into your bank account does not mean you have made income. So it is not the intention of this law to impose a tax on the basis of the money that comes into your account. And you know, when people say that the banks are going to disclose, the banks have been disclosing for the last 70 years in Nigeria. The banks have been disclosing your transaction to the tax authority for the last 70 years. So it's not something new. The only thing that is new is that the threshold for disclosure has changed from 10 million to 25 million. So a lot of people may not even never be seen by the tax authority. But the truth is that there is no relationship between the money that comes into your bank account and your tax obligation. The basis for imposition of tax in the law is on income and profit, and it is based on self-declaration. It is only in instances where you don't disclose that the tax authority is then empowered by law to utilize whatever they can see in your bank account to presume or assume what your tax obligation should be. So if 200 million comes into your bank account, for instance, and you disclose to the tax authority that your entire profit in all of that is 20 million, it is 20 million, and if you can support it, nobody is going to impose a tax on you on the basis of 200 million. But you begin to have problems with them when 200 million comes through your account and they don't see your tax returns. So it's just I needed to get to this point so that to clarify to everybody and put your mind at rest about whether there is a relationship between your daily cash flow and this tax obligation or this tax reform. There's no relationship. You are supposed to run a bank account like everybody runs a bank account everywhere in the world. And there's no relationship between their tax and the money in their bank accounts. You understand that? So
yes,
I think
yes.
it's good for us to get to that point of clarification. But those are some of the things impacting you on the personal finance end. Maybe what I didn't mention also is that if you mentioned that if you sell your house, there's no CGT. If you got a gift from anybody up to the sum of 5 million naira, you don't get to pay tax on it. If you sell your jewelries and all your personal chattels, it's up to 5 million naira, you don't get to pay any tax on it. If you sell 2 of your cars, irrespective of the amounts in a particular year, you don't get to pay any tax on it. So there's a very robust exemption threshold within this law, and it's favorable to a lot of people in the middle class and then the lower class. So maybe I should pause there for Tara. Thank you.
Thank you. Thank you, Ni. You gave us so much. I've been taking notes. I have like 2 pages filled up. So thank you so much. I can't imagine how our audience are feeling already. And I mean, one of the things I know that's been buzzing on social media is this. And at the end of the day, it's lack of information. And I like that you took our time to unpack all of this and share all of this with us. So I don't know, Ustina, would you like me to, there's a hand up. Would you like to entertain this, even though we started by having people drop their Q&A, drop your questions in the Q&A box. Would you like to entertain this now, or do you want us to go on? How would you like it?
Yeah, let's hear Francis. Thank you.
All right then. Francis, can I unmute him, Ustina, or how do we? Okay, let me allow this one. Okay, Francis, please, can you go? Francis, are you here? Okay.
Okay, maybe we move forward. Let's move
All right.
forward.
Okay, awesome. To my next question, which is how does the tax reform affect SMEs and small businesses? What are the impacts on registered business names and limited liability companies? And likewise, revenue cap, and how does it affect the LLCs? Also under that, if you can, the effect on daily inflows for small businesses and changes in the hospital healthcare sector. I can go over them, I can comment. I know that that's a lot, but please.
That's a lot, but
okay, so I'll just cap it with how do these tax reforms affect small businesses, SMEs, and impact to business names and limited liability companies? Then we'll take the remaining afterwards.
Okay, so what the law then attempts to do about SMEs is to lower their tax burden. And when I say tax burden could take different forms. It could take it could take the form of paying too much or using too much time to comply with tax obligations. It's not just about tax obligation is not just about you having to pay money. It's also about filing the appropriate returns or complying with your tax obligation as established in the law. So sometimes you may be exempt from tax, but you still have to file some papers. And sometimes the time it takes to file that paper can be a burden, especially for SMEs. Now, what the law has then done is to try to incentivize formalization. And what I mean by that is that the government observed that a lot of our businesses, they are actually in the informal sector. And when you have a lot of your businesses in the informal sector, it doesn't allow you to get the appropriate data. It doesn't allow the government intervention to work as it should work. So what the government has then done is to provide a tax exemption for companies that have 100 million and assets below 250 million. So if you are a company that has assets below 250 million and your turnover is below 100 million, your income tax rate in Nigeria is 0%. Now, observe that I say companies. There are different, you can express your business through different corporate vehicles. An NGO or an incorporated trustee is a vehicle. A business name is a vehicle. An enterprise is a vehicle. A limited liability company, or what you call an LLC, is a vehicle. Now, the exemption that I've just mentioned is limited to companies. And I must also say that this exemption does not extend to those involved in professional service. So if you are an engineer, if you are a doctor, if you are a consultant, if you are a lawyer, it doesn't extend to you. So you can't say that your company is a small company as a lawyer. So even if your turnover is below 100 million, a law firm cannot claim this exemption. That is the law. Now, should you continue your business? Should you continue running your business as a business name or as a company? Now, if you are running a professional service, it makes no difference, really. It makes no difference. If you are running anything other than professional service, from a tax point of view, it may help you significantly to actually formalize and register a company, bearing other considerations. But you see, if the people that are within yours, if you have two companies, if you have two non-professional service company, one is operating as a company, the other one is operating as a business name. The one that is a business name earns 80 million, but he still has to pay tax that could be as much as 20%. He pays 16 million naira. The other guy is a company. He earns the same 80 million, but he pays 0 in tax, just simply because of his structure. So you have to think about it. It's not something that anybody can tell you that this is what is better. The much I can say to you is that within the tax law, there are incentives for companies which are not available to enterprise, business name, and other non-corporate vehicles. So everybody can then decide exactly what they think is good for them. I think it's tax efficient, especially if you don't run it a professional service firm. I think it's tax efficient to run as a company going forward, and you have opportunity for more deduction. You have opportunity for to do more things. As a matter of fact, most of government business grants, they are often given to people that are registered as corporation, so those are minimum requirements. So for entrepreneurs looking very much into the future, it will make more sense to them to formalize now, because the government really does not consider enterprise and business names as a formal business vehicle, actually. And of course, the exemption that they are provided is limited to companies. Now, the other thing that the government has done for SMEs, or not just for SMEs, but for the generality of Nigerians, is to exempt food, education, healthcare, rent, public transportation, and renewable energy will now be subjected to VAT at the rate of 0%. So if you buy food, your school fees, any service you enjoy at the hospital, they will no longer be subject to VAT. But the difference, before now, some of these services that I've mentioned, they were VAT exempt. But the difference between something being VAT exempt and being zero rated is that the inputs you incur. So when I say input, I mean input VAT. You incur on your raw materials. You are able to recover that input from the government. So if I'm to give an example, for instance, would be to say bread, for instance, under the current law, is not liable to VAT, but they are exempt from VAT, which means that the VAT you pay when you bought flour, the VAT you paid when you got the distribution van, the VAT you paid on your security, your everything really, you are not able to recover that VAT from your output. But because it is now zero rated, you can get that VAT back from government. You can then write to government that in this particular amount, I've incurred this also amount on VAT on all the services, on all my production. And government is required by law to refund you the VAT within 90 days. If they don't refund it to you within 90 days, you are entitled by law to recover it from any money that is due to government from your side. So even if it is income tax you're about to pay to them, you can take that money from them. That is the position of the new law. And the other good thing is that the people that are within the service business, if you're an engineer, if you're a lawyer, if you are running a financial service, currently we are unable to claim all our input VAT. We are unable to claim any input VAT from the output that we charge. So when we provide services to our client, for instance, the entire output VAT is what we pay to government. But going forward, the VAT we pay on buying cars, the VAT we pay on our security, on logistics, on everything we do really, we are then empowered to be able to take that VAT from the output VAT, that is the VAT we charge to our customer, and whatever is left is what we get to pay. And in a situation where there is nothing left, we don't get to pay anything that month. And I think that is something good that the government has done. The Nigerian government is spending 3.4 trillion naira on that in 2026 alone. And it's something really to be grateful for. The expectation is that it's supposed to reduce the cost of doing business in Nigeria. And this is the first time that our VAT system is working like a proper VAT system. And it's something to be excited about. So small companies will no longer have to file VAT or charge VAT. So if you are within the 100 million threshold, you don't have to file VAT, you don't have to charge VAT. You don't need to bother yourself about those filing obligations on the VAT level. Then the other good thing is that if you have issues with the tax authority, government has set up an office that they call the Office of the Tax Ombudsman. It's going to be in all states of the Federation. You can go to that office and complain to them if you are not satisfied with anything, any matter you have, any issue you have with the tax authority, you can go and report them. The head of that agency reports directly to the president. So they are independent as much as possible, really. And then there is expedited VAT refund that I've talked about. There is no longer a requirement for government must audit you before they can give you a VAT refund. No, every VAT refund has to be processed within 90 days. And I think that is good. So there's so many good things for SMEs within this law. Tara, let me take it back to you. Thank you.
Thank you so much. I didn't want you to stop because I don't want you to stop. So, but before I go on, there's a hand up and I'd like to entertain that. I have a question, and that's because we're in an age where first question is what makes a professional service? You mentioned that. And that's because in today's time, I just listening to it, I would think that, we have digital content creators, we have new professions coming up. So if you can help me shed more light on that. And in line of SMEs, there are a number of business opportunities. A number of people are leveraging the internet, the World Wide Web, and they are making so much money. So if you can shed more light on that and how the professional service relates to the likes of the content creators, social media strategies, which I know my generation, but please just shed more light on that. That would help me.
Yeah, the thing is that the only thing that is crystal clear is whatever can be read in the law in literal English. So what the law has said about what is professional service is that you need to be able to, a professional service is something that must be of a specialized nature. You would often require a certification to be able to do it. Those are indications. So the law cannot possibly mention everything that could be professional service. But before we can qualify anything as a professional service, you would normally require certification to be able to do it. Do I require certification to be able to do content creation? Is there a licensing body for content creation? If you begin to fail those questions, automatically you cannot be captured within professional service. You understand that? Yes, so if you're a content creator, it will be very difficult to situate or position that you are rendering professional service. You understand that? But if you're a consultant, mention it. If you want to do taxation in Nigeria, you need a certification to do it. If you want to be a doctor, you need certification to do it. An engineer, a lawyer, an optometrist, those things are very clear that they are professional services. An auditor, they are professional services. But a content creator, anybody can create content really.
Yes, consistency. Thank you so much for that. So I would entertain the hand up, Ife Dayo. You can speak, you can unmute your mic. You have access to do that now. Ife Dayo, are you there?
Okay, yeah. Good evening.
Good evening.
Yeah, good evening. Thank you so much for the presentation. And kudos to Nii. Mr. Nii, thank you so much to unpack in this presentation. So very quickly, I work with a life insurance company, and then it seems we are in need for a big shift because currently we pay a minimum tax of 0.5% on our gross income. So this gross income mainly consists of investment income earned from shareholders' funds. We all know that for life insurance, policyholder funds are not subject to tax. And this is not going to be replaced with the 50% ETR, effective tax rate, to be applied on profit before tax. So what that means for life insurance company is that our tax now will not be based on actual profits. that we also include going forward policyholder funds. And then, and I'm looking at the implication of this effective tax rate, that profit before tax will now be taxed based on 50% minimum tax rule. And this is because my company, we actually meet those two requirements if we refer to section 57, I think subsection 1. So we belong to a member of multinational group, and our turnover is also over 20 billion.
Mhm.
So
50 billion.
So my question is, over 20 billion, 20 billion in turnover. So my question is, how, so I'm trying to understand what this means to my income statement, looking at the CTR. And if you look at that section 57, you see there's a word I saw there that says, notwithstanding any provision of this act or any other enactment. So that looks to me like it looks so absolute and onerous, if I may put it that way. So I think there's a bit of a mismatch between the intention of the law and the applicability of this provision. I would like to know your thought about this. Thank you.
Yeah. The truth is that every time you make a law, you sometimes you inadvertently, as you try to solve a problem, you create another problem. And you know that insurance businesses have always had that challenge. You understand? And especially the life insurance business. If you read through the amendments to the taxation of the life insurance business, you will see that there is a deliberate attempt to ensure that the policyholders fund is not covered within, the policyholders fund is not covered for the purpose of taxation. But what may have happened in the section 57 is that section 57 is an overriding provision that then seeks to bring in all insurance company at the level of pre-tax profit. You can't solve that problem. You can't solve that problem except by what they call a tax advocacy. If you put a case before the FIRS, if you do a combined reading of the taxation of life insurance together with section 57, it's clear that the intention of the drafter of that law is to ensure that the policyholders fund are not covered for this purpose. So the FIRS can exercise with its powers of interpretation to grant an administrative exemption, to grant an administrative exemption for a life insurance business. And you have to work together with NIA to be able to push some of these things. And most of the time it has worked. I have participated in the insurance reform. Before we got to where we are today, the insurance business used to be more deadly than this in terms of taxation. But by the way, the threshold to qualify for section 57 is actually 50 billion. So the gazetted copy of the law, it was amended from 20 billion to 50 billion. So you are only covered for the purpose of the minimum effective tax rate if your turnover is above 50 billion, not 20. It was amended in the final gazetted copy. You understand? But to your question, I think it's only an advocacy that can solve that. It's only an advocacy that can solve that problem, actually. Tara, over to you.
Thank you, Ni. Thank you, Ifedayo. Please, the floor is open. If you have questions, raise your hand. We'll take them. We're coming to the end of this session. And I'm sure a number of you have a lot of things you're doing with your time. So please do not hesitate. This is a very, very, very safe space. Ni doesn't bite. All questions will be resolved. All right. So Ni, I have another hand. Adegoke Oladipo. Adegoke Oladipo, let me unmute your mic. All right, you can unmute yourself, Adegoke.
Oh.
Awesome.
Yeah, can you hear me?
Yes, loud and clear. Please carry on.
All right. good evening, good afternoon, good morning, whenever you're hearing me from. Yes, so I joined this meeting late because I was in a meeting. I just had to pull out from the meeting and then just I'm like doing two things at the time at the moment. So basically, when I saw this on my email, I was like, I need to hop in for this kind of meeting because educating myself um on how taxes is something I should look at because I'll be doing a business next year, and as a business owner, you should know how to maneuver yourself in the spaces of that. So I would like to just to do like a recap on how I can bend over myself on taxes and how the rules, how how favorable the rules can be to me, and just in terms of business owner.
Yeah, I mean, what I've said, I think the summary of what I've said is that if you are not running a professional service firm, or if you're not running a business that can qualify as a professional service business, a lawyer, an accountant, an engineer, that it may be helpful to actually use a corporation, that is to register a limited liability company instead of using an enterprise. There are some other considerations that may play in that conversation, but to a large extent, it will help you if you register as a company, And I also said that if your business is running a turnover of less than 100 million, then you're not liable to tax. Below 100 million, sorry, and your fixed asset is below 250 million, you are not liable to tax. Maybe what some people would also now do is that they'll begin to create several companies. I don't know how the law is going to receive that, but if you have 3 companies, 4 companies, I mean, and everybody is playing under under 100 million turnover, yes, you'll still be exempt from tax, but you know that the stress of dealing with 4 companies, registering payee in 4 companies, registering for ITF, registering for NSITF, and all the other extra obligations that could come with running several companies. You want to really be careful. But I think the summary of it is that within this law, from my perspective, a corporate vehicle seems to be a better vehicle to run a business, particularly if you are not a professional service company or a professional service firm. A corporate vehicle is better to run a business going forward. All the incentives that are in this law are for companies. If you're an enterprise or a business name, you get to pay tax on your own name. And when you pay tax on your own name, even some of the expenses that you have, your valid expenses, it's the government might not allow you to take it, actually, because some of your expenses are sometimes in your name. You have a business premises as a business name, but your name is Jide, and then your electricity or power bills is in Jide's name. So sometimes the Inland Revenue Service disagrees with you that you can't take those deductions. They won't do that when you're a corporation. And when you're a corporation, beyond taxation, actually, when you're a corporation, your tax is different from the tax of your corporation. And you can be sued. You cannot be sued in your own name, even if the corporation has any issues, So those are some of the advantages that using a corporate vehicle might have to you. But what we have said, I think the long and short of what we have said, largely that you can benefit from, is that using a corporate vehicle might be a way to might be something to look into. Nobody can give you a final opinion or a specific opinion until they understand your specific circumstances, but it may be something to look into. So if you are running with a business name today, you want to really look at it. Is it worthwhile down the road? I also spoke about government business grants. They are usually not given to business name and enterprises, and except, of course, all those 5,000, 10,000, 50,000 that government shares. But I'm talking about proper business grants, proper business loans. They don't give it to business names and enterprises. So you want to look at, say, the some of the advantages that I've outlined for using a corporate vehicles, even beyond tax, and then consider if that option works for you. Thank you.
Thank you, Nii.
Yes, sorry, one more.
Adegoke,
Yeah.
does that satisfy you? Okay, carry on.
Yes, yeah, thank you. Sorry, one more question, please. So, after this meeting, can we have like a, what's it called? You know, like maybe extra service with Mr. Femi or Mr. Ishwedayo, you know, just to like going forward, just to educate ourselves on how the taxes work. Like I said, I'll be going into business very soon, so I need someone that'll be like a guidance to me in that area. So yes, there's open service in that aspect.
Yeah, I mean, we have a business hub. We have a platform that assists new businesses to register with CAC, open a bank account, register with tax authorities, and what have you. So we have all the services that a new business would require within that space, you know, and our fees are very considerate, and you know, you can do a lot with that actually. I don't know if Chizoba is on this call. Maybe you can share the link or the contact of the business hub on in the chat room, so that we can have a call to discuss further. But we have robust resources to assist any new business actually. Thank you.
Also, thank you so much, Nii. Also, Adegoke Oladipo, the OmniX team would also reach out to you to assist in that regard. Is that okay? Are you there, Adegoke? All right. So thank you. All right, I got that. If you have more questions, please keep them coming. We're not sure when next we'll be setting this up. But it's definitely going to be very, very soon. However, this is an opportunity to get as much information as you need before you get into the next year, which is less than 30 days from now, if you think about it. So you need the right posture for your business. Also, I have one more question, or maybe two, Nii, for you while we wait on our audience to give us more questions for us to dissect. And this is in regards the cross-border income and non-residents. So I would like to know, and a number of listeners, because we did feed on some of the survey questions that a number of us filled out. So that's part of the reason, and that's part of what we're feeding and we're throwing at Nii to help us dissect. So thank you all for filling the survey. And I hope that the answers Nii has given are to your satisfaction. So the next question is implications for non-resident staff, and likewise tax treatment of staff paid from outside Nigeria, remote workers, as some of us like to call them.
Okay, so for cross-border income, I think this law also covered cross-border transaction. Nigeria is probably one of the best countries to receive foreign inflows because other than the requirement to ensure that your money comes through a domiciliary account, that's all you need to ensure that the money that is coming to you from abroad is exempt. Now, let me clarify. There are 4 classes of income that are explicitly exempt from tax in Nigeria. So if you receive those kind of income from abroad, you are not subjected to further tax in Nigeria. Rent, royalty, interest, and dividend. If you receive any of those 4 from abroad, you are not subjected to any further tax in Nigeria, provided it comes through a government-approved channel. So government-approved channel in Nigeria today is foreign currency domiciliary account. So if any of those 4 types of income comes through that account. Now, if you live in Nigeria and you work for a company that is abroad, if that income is not subjected to tax abroad, it is subject to tax in Nigeria. That's the law. You know, we have had this issue in Nigeria that, you know, Nigeria's Nigerian taxation is by what we call residency rule. So if you live in Nigeria, you pay tax in Nigeria. But there is also another requirement that the person paying you that salary must be an employer in Nigeria before you can be liable to tax in Nigeria. So that requirement of saying you must live in Nigeria and the employer must be in Nigeria, it has now been changed to from hand to all. So if you live in Nigeria, but your employer is not in Nigeria, you are still subject to tax in Nigeria. So if you're a remote worker, you work for an organization that is outside Nigeria, but you live in Nigeria, the income you receive from that organization abroad is subject to tax in Nigeria. That's the law. Now, if you live abroad, but you earn income from a Nigerian company, that income is not subject to tax in Nigeria. You are supposed to pay your tax to the country where you live. So that is the rule around cross-border transaction. I think the other thing that also has to do with foreigners and diasporans is that if you have an asset that is located in Nigeria, even if you don't live in Nigeria, in the current law, taxation in Nigeria is usually by residency. So even if you have a house in Nigeria, but you don't live in Nigeria, you can make a case for tax exemption under the current law. But going into the new law, your property has provided the tax base for you in Nigeria. So whether you now live in Nigeria or not, it doesn't matter. If you have a property in Nigeria, even if you are not a Nigerian, you are liable to tax in Nigeria. So if you have a house in Nigeria, but you live in London, when you sell the house, this house is subject to tax in Nigeria. So that's something to clarify. If you don't live in Nigeria, but you have a business in Nigeria, that business is also subject to tax in Nigeria. If you earn from abroad, but you live in Nigeria, I have clarified that is subject to tax in Nigeria. However, if you're a teacher, or you lecture, the income you earn is not subject to tax in Nigeria, even if it is earned from abroad. Now, that is where a lot of content creators can come in, because the law did not specify what kind of teaching. So if you are educating people on a certain thing abroad, if you are educating people on certain thing, or you are paid by YouTube for educating people, then you don't have tax obligations in Nigeria. That income that you earn from abroad, it is not subject to tax in Nigeria. That is the law. But if it is not teaching, anything that is not teaching, if you earn income from any other thing you do that is non-teaching, then you get to pay tax in Nigeria. So I think I've clarified for remote workers. I've clarified for those outside Nigeria collecting salaries from employers in Nigeria. I've clarified for passive income, rent, and the likes. And then I've clarified for business income for Nigerians in diaspora that have a business in Nigeria, that are subjected to tax in Nigeria. So those are some of the provisions of the law regarding foreign sourced income and non-residents. Thank you.
Thank you so much, Nee. Thank you for that clarity. I got a lot as well from it. I don't know if we can entertain one more questions or we can wrap it up. Nee, are you open to one more?
Yeah, let's go.
This
already
is
here.
awesome. Well, yeah, so might as well finish well. Okay. So the last but not the least from me, except our audience to have more questions for us, is in line with what happens if my tax registration is not linked to my bank account. Yes, I think that I'll keep it there and then you can tell me. And at the same time, how will bank accounts still function? What's the bank's posture in this regards? How is the bank collaborating to enforce this? Because I'm sure they have a posture here.
Okay, we will always, as much as possible, try to do everything in line with the law. Now, what is the position of the law regarding tax identification number and linking your bank account with your tax number? So the requirement of the law is that every bank and financial institution shall ensure that all taxable persons have a tax ID linked to their bank account. The law then went further to define a taxable person as someone who exploit resources and carry out economic activities to earn an income. You know, and what that means is that for you to be required to link your tax ID to your bank account, you must be a taxable person. The people that are very clear that they are taxable persons are those in business. So if you have an enterprise, you have a business name, you have a company, there is no dispute. There is no, it's very clear and sufficiently clear to us that you are a taxable person. So for those ones, they are required to provide their tax identification number. And that is not new. Under the current law, you cannot operate your bank account without a tax identification number. But what the law has even done is to call it a tax ID. And the law went further to say the tax authority will clarify to us what qualifies as a tax ID. So we should really wait for the tax authority to clarify to us what qualifies as a tax ID. What we know today is that the tax identification number will qualify as a tax ID, but it is not the only thing that will qualify as a tax ID. As a matter of fact, within the withholding tax regulation, the RC number, the registration number of a company, qualifies as a tax ID there. The national identification number of an individual qualifies as a tax ID there. The BVN qualifies as a tax ID there. So these are some of the information that informs our posture as a bank. And our posture is that we're going to allow the businesses, our business customers to provide their tax identification number. We're not going to restrict their accounts. We're going to give them time to provide their tax identification number and give them a timeline to provide their tax identification number, because there's a penalty if we don't. There's a penalty of 1 million naira for every account we did not collect their tax identification number. So it's important for us that we must collect their tax identification number. For individuals, it is not mandatory, except we see objective evidence that shows us that you are using your individual account to run a business. That is when we will mandate you to provide your tax identification number. Now, but as much as possible, we would also encourage individuals to provide their tax identification number. It is not mandatory, and there is no provision anywhere in the law that requires us to restrict your account for not providing your tax identification number as an individual, because we cannot really say whether you're a taxable person or not. You know, how do you differentiate a student from how do you differentiate a student from a pensioner just by looking at their bank account? Is one of the reasons I also stated that there's no relationship between your tax affairs and your bank account. Or you see, if you are a salary earner, for instance, and I see a consistent flow of salaries into your account, you are a taxable person. You should have your tax ID on your account. And we also clarify that getting a tax ID is not that difficult. If you have a BVN in Nigeria, it's just to slot your BVN into the JTB portal. It will provide your tax identification number within 10 seconds. You know, and we have provided that link to our customers to generate their BVN and provide it. We have also provided a link where they can drop it for us. So it's not such a difficult thing, but we're not going to take a very punitive approach. What I've explained to you is our posture regarding the tax identification number. It is mandatory for all our business customers, and we're going to give them time to provide it to us. It is not mandatory for individual customers, but we're going to encourage them to provide it to us. You know, so that's our posture, and that is the education that you need regarding tax identification number and the way it relates to your bank accounts. Thank you.
Thank you so much, Nii. We have definitely come to the end of this session, except, of course, anyone has any questions, any hands? Any hands, any questions? No hands, no questions. Okay, so thank you so much, Nii, and for everyone out there, we do now understand what posture to take. Tax reform doesn't have to be something that catches you off guard. With the right information and tools, it can become something that you plan around and even leverage for your own business needs and your own goals as well. So to everyone here who was able to make it, for those of you that asked questions and you contributed, we appreciate the attention. We appreciate the questions. We appreciate the opportunity you gave us all to learn from each and every one of you. And on behalf of OmniX team, we thank you. And Nii, we thank you as well. And please feel free to follow us on our socials, OmniX by Sterling, on all digital assets, social media, Facebook, Instagram, Twitter, LinkedIn. It's OmniX by Sterling. And we will definitely reach out to you after this session. And likewise, for those of you that were asking if we were going to share the slides, we will share the slides with you. And a member of my team will share that in a mail, an attachment, of course, alongside some other questions and feedback as well. Whatever feedback you have from this session for Nii as well, please feel free to share it. It's a very, very safe space. We will communicate with you when our next Invest Like a Pro webinar series is going to be, and we look forward to having you. And please share the link, post it on your DP, invite more people to join. The more access to information we have, the more opportunities we're able to leverage and make in today's world. And to Nii for also helping us dissect this tax reform, because before now, with all the buzz, I personally did not know exactly how empowering this was, and I did not understand it in depth. And but with this session, I have more insight. There's a lot of light bulbs going on, and I love it for myself, and I can imagine what it's like for every other person out there. And it does sound like a very, very inclusive system that we look forward to seeing how far this will take the country in making us great again. So on behalf of OmniX by Sterling, thank you. Audience, thank you, Nii. And then we'll see you again next time.
All right, thank you.
All right then.